Hey everyone, and welcome back. Now today we're going to go into the state of Bitcoin and where things are sitting at, especially since we've started to see rates being cut. This is kind of the cycle in which we're expecting, at least within the near-ish future, that we're expecting to see Bitcoin move up. So we've got a lot of data and information to go through today, so let's go ahead and dive right in. So getting started, we're looking at the Crypto Fear and Greed Index, and what we can see is we've moved back into neutral, almost right dead in the center of the Fear and Greed Index. So what we can see is obviously price has started to recover, especially from a couple of these, shakeouts where we've seen some pretty aggressive dips to the bottom. And now we're starting to come back into the upper part of the channel that we have been sitting in for the past several months. And so I think there's a lot more optimism that people are starting to feel a lot better about kind of where we're at in the market. I think, as I've mentioned on the channel before, I think kind of the fear was fairly overblown as far as where things are at, and coming back into this neutral territory, I do think it seems to make a little bit more sense. So overall, that's kind of where we're at with the Fear and Greed Index. It does, at least overall, we can see it is kind of trending up, at least especially since kind of the beginning of September. I do think this kind of trending up back towards neutral does seem to make more sense for where we're at in the market. So looking at the chart, we can see we actually have moved fairly well past kind of this midpoint, and we're actually about 3/4 up the top of this channel in this descending channel that we've been in for the past basically like 6 months at this point. Yeah, ever since the beginning of March, we've been in this channel. So obviously there's a couple of different things that we could see here. These are the daily candles. So obviously we've seen a pretty nice rally going into rate cuts, and then as well as rates actually being cut, we saw that rally continue on up. I am wondering how legitimate this rally really is. I personally feel like a lot of this was probably priced into the market. We also have some liquidation information that, probably I think will add to this claim. What we could see is, maybe the momentum starting to run out in this zone of resistance. We can see a wick up here, a couple wicks up in this area as well. And then, I guess maybe a couple wicks down into this. So, this definitely is kind of a liquidity zone from what we're seeing. We could see it run up, hit the top of this channel and then maybe come down. I can't help but shake the feeling that we are probably going to see a revisit into this area, particularly since this is a bit of a liquidity zone. I can't help but think that we're gonna come back down and see this before we end up breaking out of this channel. So even though we are moving up, I don't necessarily expect to see a sustained break through this upper end of the channel, but this is not financial advice. I don't know anything that's going to happen for certain. So, it very well could. We don't actually know for sure. But ultimately, I do feel like this is probably going, we're going to see some returns down to this lower level, but, we'll have to see. One other thing is, as you probably noticed, I do all my charting within Margex currently, just because I do use Margex almost exclusively to trade. I do take leverage trades now and again, especially when we're playing some of this short-term movement within the market. Given, if we start to see some of the momentum start to peter out on this move to the upside, I may potentially take a short just because I do see that we will be coming down to the bottom side here. Again, we're about to jump into some liquidation information that I do think may support that claim. But again, we'll get to there in a second. If you are interested in trading as well, I do have a link in the description below. If you guys are interested, Margex does not require a VPN. It also does not require KYC. They also have up to $10,000 in deposit bonuses, as well as a $500,000 CASPA airdrop that's ongoing until the end of September. So if you're interested in any of that, feel free to get signed up and start trading. As I say all the time, though, leverage trading can be risky, so just do be careful and be responsible if you want to try it out. So moving on, let's check out liquidation levels. And what we can see, kind of what I was alluding to a second ago is, at least on the 1 day, we're very, very biased toward liquidating longs, at least based on what the liquidation map is showing. If we look at 7-day, we also see something similar. It actually is even more biased toward liquidating longs. And then if we look at the 30-day, something similar. As we've seen, this has actually been biased towards liquidating shorts for most of the past month. But obviously, we have since seen almost a $10,000 rise in the price of Bitcoin, which has kind of cleared out a lot of that leverage. And so now what we can see is there's actually a bias towards liquidating longs again, which would indicate a move to the downside. So what this means to me is, and this is part of why I have this bias that I think we're going to see a pullback. First off, I don't necessarily believe that the pump today was legitimate, just because, like I said, based on the Fed site that we were looking at a couple days ago, the probabilities of a 50 basis point rate cut were the odds-on favorite. So this pump doesn't necessarily seem to be totally legitimate to me, and I do wonder if this is kind of a setup to take out more leverage, just because people, I'm sure, we're starting to move up into neutral, the price is starting to rise, people are starting to get jazzed. It would not surprise me if, they're trying to get people to kind of suckered into the market, and then we'll see a pullback to, liquidate as many people as possible. And as we can see, this liquidation map does support that, at least currently. So that is something to just remain aware of. Like I said, this chart has been, in my opinion, incredibly accurate this far. So, I definitely am not planning on betting against it. The only thing that we don't really know is, the timing of exactly when this happens, right? And so that's the only thing is, you got to remember the age-old adage of, the market can remain irrational longer than you can remain solvent. And that is especially true if you are doing leverage trading in particular. So if you are, just be careful, and just something to note there. I want to take a quick stop and look at the liquidation heat map just so we can see kind of where a lot of the leverage lies on a very much more like big picture scale. So as we can see up here at kind of the 72,500, 73,500 range, we see a ton of liquidations up here, and then also down around like the 46,000, which again, both of these are breaking out of the downward channel that we have been seeing. You can see kind of everything within here is much lower. And then also, there's kind of like the macro superstructure break of kind of down in this 32, 33,000 range. So obviously, if we break to the downside, the first one to hit is going to be kind of right below that downward channel. And then after that, it would be kind of the larger superstructure here, which we'd actually have to go out prior to the start of the year to kind of see where this is coming up. So that's kind of what we're looking at right now from a more like big picture perspective. Another thing I wanted to look at is the Bitcoin price temperature. Now, this historically has been relatively accurate, you could say, in terms of projecting the tops of the market, just because obviously this works basically as kind of it takes an average of the previous day's prices. And so the more it differs from day to day, obviously the hotter the temperature gets, and then the less it differs, the lower the temperature gets. So what we can see here is we have seen, a definite very like stable drop down in price temperature over the past couple of weeks. And actually this is more like months overall. So, we've definitely seen this pullback. This to me is kind of looking like 2019, where we can see, we did see kind of a mini spike here and then a sustained drawback until we eventually saw some level of capitulation and then back into the run up. Looking here, this does look very similar. What we can see is we have not seen price temperature as low as what we saw in, I guess at this point, early 2020. So it is highly possible that we do continue to see, this temperature kind of draw back potentially into early 2025 and maybe a point at which we start to see a run up. So this is something where, while people are getting excited, rates are being cut, things like that, there is, just if we were to follow the 2019 cycle or the 2019 process, we could see, a decent bit more time of drawback in price temperature and consolidation and essentially people getting bored, people getting liquidated, all this type of stuff. So that's just something to be aware of. The other thing I wanted to look at too, presents similar but maybe slightly different types of metrics here, is this is the halving progress chart. What we can see is, based on the 2013 halving, we would have already seen a pretty dramatic run up at this point. If we look at the 2016, 2017 halving, we can see at this point prices are relatively stable. We haven't seen much of the run up at this point in the 2017-2018 bull run. Same thing here with the 2020-2021. Prices pretty stable, and then actually would be very, very shortly is when we'd start to see this next run up. Same thing here. So as far as where we're at within the halving cycle, things still look pretty consistent with what we've seen in prior halvings. We haven't necessarily seen a break from previous structure. I'm not saying it can't happen, but at least this far we haven't seen it. So, and this is something that we see on X. This is actually more correlating with rate cuts rather than the halving cycle. I do think, I have mentioned this on the channel before, but I do think it's very important that we do not discount the macro environment from the price of Bitcoin. It's just so happened in the past that rate cuts have kind of lined up coincidentally with the halving cycle. So far, it seems to be looking this way as well this time. But we do need to consider that, given that crypto is a risky asset, rates impact this dramatically. And so as rates get cut, this is going, or at least should, positively impact the price. What we can see here, side note, Scottie Pippen becoming a full crypto bull was something that was not on my bingo card in 2024. I don't know about you guys, but that's been something that's been kind of funny to see. There's been several people posting this, but I figured I'd pull up Scotty just because I think it's funny. But anyway, that's kind of that's a digression that will go on another day. Anyway, but what we can see here is if we were to actually blow this up, we can see that when rate cuts happened in 2020, we actually saw kind of a panic right before leading up into rate cuts, where here we kind of saw a pump into rate cuts. So things have happened a little bit differently. As we do see, though, there is a bit of a drawdown. Well, I guess actually it is basically up only ever since rate cuts in 2020. I don't expect that, as I've mentioned numerous times already for numerous different reasons. It could happen. We could be up only. Who knows? I just don't expect to see that. I think we will see a bit further of a drawdown into an initial or eventual pump, I guess we should say. So anyway, those are just kind of my thoughts on the market, where Bitcoin is at, how everything is kind of shaping up overall. I do personally think, kind of based on what we're seeing right now, we at least have probably 4 weeks minimum of not really seeing a whole lot in terms of dramatic price action. I do think it is still possible that we see a massive Bitcoin run up into the end of the year. If not, it also wouldn't be too surprising to me if we kind of saw that delay and start in the very beginning of 2025. That could put us kind of behind schedule as far as the having progress chart is concerned, but it might put us closer to how 2019 looked as far as Bitcoin price temperature. So I do think there are some options there. We do have some flexibility. Ultimately, we're kind of going over, we're kind of splitting hairs at this point, right? The macro structure, everything, at least in my opinion, seems to be shaping up exactly how we'd expect it to. Everything is looking really good. And ultimately, I think there's plenty of reasons to be super optimistic and super happy about where we're at within the market overall. Again, just make sure, don't over leverage yourself. Don't do anything crazy. I mean, we are standing at potentially the beginning of one of the craziest bull runs that we may have ever seen, right? So just don't do anything dumb. Part of living through these crypto cycles is you have to survive the whole cycle, right? And so just make sure that you're not doing anything that would prevent that from happening. Otherwise, I think just stay patient, keep zooming out, look at the bigger picture, and I think you guys hopefully should be seeing some similar positive things to what I'm seeing as well. So anyway, if you found the information in this video useful, please do give me a like and subscribe. It really does help me out. As I've said, I am trying to hit 10,000 subscribers by the end of the year, and so your support in helping me do that it really does mean a lot, and I would really appreciate it. So also, if you have any questions, comments, concerns, whatever, just want to talk to me and say hi, please do leave me a comment below, because I do read and respond to all of my comments, and I also really appreciate your guys' input. I don't know, I've been watching YouTube for a really long time, and so I never really thought that like my comments made all that much of a difference or anything like that. But being on the other end of it and actually creating these videos, I don't think you guys really know just how much I do actually draw inspiration from your guys' thoughts and opinions and ideas and feedback and all this type of stuff. So please do feel free to leave me a comment. I will read it. I do take them all to heart, and I really do appreciate the feedback that you guys have. So anyway, thank you for tuning in, and we'll see you in the next video.